Welcome to the daily update. This is Being Prepared Monday, June 11th, where we'll look at the action in the market today and then see how things look for Tuesday, July 12th. And yeah, it was a down day. And some of our scenarios have kind of taken a hit. No matter what we see under the surface, we always have to go with what is price actually doing, and we have to follow that. And we have a lot of information that's coming out this week. We have the CPI on Wednesday, we have the PPI on Thursday, and then we have consumer sentiment and retail sales coming out on Friday. So we're getting a lot of information this week. What's that going to do? Well, if it kind of sticks to the historical norm, it'll probably keep things gray. There'll probably be some things that work in the favor of inflation topping out. That might work in the favor of inflation getting stronger or even weaker. So yeah, that's usually how these things tend to work. It'd be nice if we lived in a real black and white world, the way we always like to do things and make decisions. But with the markets, they're always gray. There's always things that we can be concerned about. There's always things that we can be optimistic about. So let's go back and talk about what happened. But first of all, because of my current living situation, I'm in one of these sanctioned countries. Yeah, I'm from the West Coast. I'm an American and all that stuff, but I'm not living in America right now. Well, my debit card expired at the end of June, and I have not been able to receive a new debit card. And so the email address that I usually use, john@spxinvesting.com, that's on hold for right now because I can't pay any money to anybody currently. So I have a backup email address, spxinvesting@gmail.com. That is nothing that I pay for. So that's still up and going. I'll let you know when I'm back to using the other email address. But let's go back and talk about what happened here. At the open, we did have a gap lower open, and we almost made it down to S2 at 38.47. As the day went on, we pretty much moved sideways, and it looked like, yeah, this is a solid base. This would be a good thing to launch up out of. No, it didn't really work out that way. Any buying attempts failed. So prices tried to rebound and got back above S1. We never did get to the daily pivot at 38.73, but then any strength that we saw was then used to sell. Going into the close, selling then took prices back down to the day's low, and that's just about where we finished. We were down 1.15%. Volume was below average, which should not necessarily be a surprise, especially ahead of these reports that are coming out later in the week. And we had no economic reports this week. The technicals, they're trying to turn positive, and they're trying to stay positive. Our oscillators are still positive. We're still above one of the 20-period moving averages, but we took a hit on Monday, and things did not move in the right direction. A lot of our scenarios took a bit of a hit as well because of inflation and interest rates and growth concerns. That's what everybody is freaked out about right now. Are we going to see a little bit more clarity after Wednesday's report? That's the biggie. And then Thursday with producer price index, and then after Friday. Is that going to make anything clearer? We also have the geopolitical concerns. And my understanding is they found some more COVID cases back in China, and they're resuming some of the lockdowns there. Earnings kind of light right now, but we'll take those as they come. And then the recession fears. That's the big thing. And a lot of the charts, especially from IsabelNet, are charts showing about being in a recession. So a lot of folks have already assumed that we're in that, or if we're not in it, we're going to be in it very soon. Where you have another crowd saying, no, employment is still very high. Look at the report we had last Friday. And we usually don't go into a recession with employment doing as well as it is, at least on paper. Okay, so here's some comments. The markets are very nervous ahead of the CPI release that's coming out on Wednesday. And then after that, they'll be nervous about Thursday and then nervous about Friday. The market's always nervous about something. The ADX has dropped below 20. And so we are in a non-trending environment right now. We'll have to see. Is that going to last for a period of time, or are we going to be able to switch back and go into a trend? The S&P dropped back below 3,900. Oil is still uncomfortably high. The 10 to the 5 and the 10 to the 2, they're still inverted. Fear is getting back to extreme, not all the way. We're at 27 now. We need to drop below 25. There were no economic reports on Monday, and the trend is now non-trending. I've kept the bias at more negative right now. Even though we saw some positive things, they were under the surface. We were not seeing a lot of follow through based on price. And so we've got to go with price ultimately and what happens that way. And no matter what's happening under the surface, no matter how strong of a case we can make for things to go higher or lower, we've got to look at what's actually happening. So I've kept the bias at negative, and the momentum is still mixed to negative. Now, this could change. If we get some information that comes out that is market friendly and really takes things higher, that could really help things out. Or the inverse of that is also true. We might get back into a trend, and that trend could be negative again. Let's go back and look at the day's session. We're at 27, as I mentioned, and here's the historical chart showing how we came up out above 25. Now we're dropping closer down to 25. This is oil, and this is what Goldman Sachs thinks it will be, that it's going to shoot up to 140 and then eventually fall back to 130. The futures market are telling a different story. We're at right around 105 when this chart was created. They think that we're going to fall down and actually go below 90 and be at more 88. This is showing not only is the US having problems, but they're really having trouble in Europe right now. They're showing outflows. And Europe, a lot of times culturally, even technologically, sometimes they lead the US. They took on text messaging a long time before we did in the US, and through fashion and things like that, where Asia a lot of times will follow the US. They do things after it happens in America. But we just want to keep an eye on this because the American stock market is independent. They like to think for themselves and make their own decisions, and the other markets in the world tend to follow. But we still want to keep an eye on what's happening. Then this is pretty much the same chart that I've been showing as far as sentiment, where we're extreme negative. This is similar to the AAII chart that I show, but this is more annotated, and it also has the S&P on top, where you can go back and see what was happening, different historical events when we started to get extremely negative. This chart just shows how EPS, or earnings per share, the revisions have been coming down. Now, what's interesting about this chart is the gold bar, the gold line here. This is the dollar chart inverted. This is one of the dollar indexes. And usually they go in the opposite direction. But since it's inverted, it shows them going in the same direction. And a strong dollar is not necessarily good for earnings. And I've been trying to point that out briefly in some of my videos, where companies like a weaker dollar. It makes their books look better. It's more advantageous for imports and exports. And the conversion rate makes things look better. It makes things easier to sell overseas. It makes things easier to buy internally as far as imports are concerned. And so that is a headwind that the market is also having to deal with, is this strong dollar. And it was even stronger on Monday. And I'll show you the chart later on. This chart is just saying, how are we right now? That's this light blue and gray bar compared to other times that we went into a recession. And we're about average. And they're suggesting if things get a little bit worse from here, it might be a little worse than average. It may not feel that way, and you're not having any fun when you go try to buy food or gas or something. But historically, we're not necessarily in uncharted waters when it comes to this chart. This is showing the strength in employment. This is the red bar that we got last Friday. And this is one of the reasons that some folks are saying we're not going to go into a recession. Employment is doing very well. Look at the last employment report. Then this chart just is similar to the monthly chart that I show in the weekly video. It's the stock to bond allocation. And it just shows how stocks have really been outperforming especially since 2020. But have we spiked now? Are we going to start coming back down? And is that stock advantage going to go away and be replaced by bonds? We don't know yet. This is kind of interesting. It shows how the approval rating of the current administration, whether you like them or not, whether you agree or don't agree with them, doesn't matter. People don't like inflation, and they feel it, and they hate it, and they tend to blame whoever is in the office at that time. Where the current administration started out at 56% approval, now they're down around 38. Well, during that same time, inflation started out at 1.4%, and now we're at a technically published 8.6%. And is that going to continue to go up? If that goes up, look for these approval ratings to even go down. Now, there's other reasons to like or dislike an administration, but this is what average everyday Americans have to deal with. And when they don't like it, they don't like who's in charge. This is a chart that shows that maybe earnings per share are a little too optimistic right now, where this is this open bar. This is where we're at right now. And they're suggesting that we're going to see a 6% growth of EPS in the second quarter. They're also suggesting for the year, we're going to have 10% growth. And then in 2023, 9% growth. Some people think, as we see EPS estimates getting revised down, is this really going to hold up? We just have to wait and see on that. This is showing where the S&P would be if we line up with PE ratios. And if the earnings per share is at 250 and you're at 17 times earnings, which is considered a little bit expensive, but not necessarily extreme, the S&P should be at 4250. The one that's kind of freaking people out is this one over on the side. If we keep seeing EPS estimates going down to 225, and then we get to more of a fairly valued market, that would take the S&P 500 all the way down to 3150. Okay, we're at 38. We're at the high 38s, 100 right now. So that would be another, 700 points off of what's already been taken off of the S&P. Again, this is just a forecast. We just have to see how things play out. So let's look at the VIX. With the down day, the VIX did advance on a closing basis and didn't really spike up with the bar, but did also advance. Here's the VIX of the VIX, which had been really going down overall. Well, it spiked up a little bit after Monday's session, both on a closing basis and on the line, or the bar basis and the line. The Ulcer Index, and this is interesting. If you get a chance, go back and watch the weekly video that I put online. The weekly Ulcer Index is actually a little bit more true to what we're seeing right now, where the Ulcer Index on the weekly chart is really quite high, where it's really been falling here on the daily chart. Just something to point out. We're down 20.01%. We're back slightly into bear market territory. The equity put call ratio did advance with the down day, but we're still declining on the 5-period simple moving average of the VIX. Diesel, I just wanted to bring up a chart here, just shows how it's going to the moon, almost like with gas prices. Copper, I wanted to bring this up because we've been seeing some real weakness right now, and they call it Dr. Copper. It tends to be a barometer of the economy. When it's going up, the economy tends to do better in the future. When it's going down, the economy tends to slow down. Well, copper has really been declining lately. And here is a ratio between copper and gold, because you'd think gold would be just going really well right now, but it's not. So copper is not only going down, but gold's going down as well. So this overall ratio is also continuing to decline. This is that same chart, and it just shows that there's a really wide spread between the copper gold ratio and where interest rates are at right now. And usually they tend to be closer, and usually they tend to move in the same direction. What's going to need to happen? Well, the copper gold ratio is going to have to improve, or interest rates are going to have to come down, or a combination of the two. Support and resistance. Here are the daily pivots for Tuesday's session. Again, I just go through this quickly, thinking that you might stop this and then look at these different levels, because they really do come into play big time. Here's the daily chart showing that we just dropped right below the pivot. We had been hanging on to that, but no, after Monday's session, we dropped. Are we going to be able to get back above this pivot level? And this also shows how volume has really dropped off. Here's this crazy machine gun chart also showing that we're still above the longer term support. That's at about 38.29 to 38.26 or so. We're still well above that. But if we really start to head lower, we'll have to see, is this support level going to hold? This is supposed to be a little cleaner chart right here. And here are the pivots for the month of July, showing that we had gotten above the daily pivot. Now we're starting to drop back down below. Fibonacci retracement. Can this area act as support if we continue to fall? This is pretty significant. We're still above it, but if we start to head lower and this breaks, that could be pretty negative for the S&P. We're still above this 38.2% retracement now. Can this hold if we continue to fall? The sectors, we had communication, discretionary, and tech. Those are the ones that have been getting hit hardest so far in 2022. And it looks like they were starting to do a little bit better. Well, they didn't do so well on Monday. There was one section, the real estate sector, which I'm hearing some reports that we might see some real estate problems in the near future. At least a lot of people are predicting that. It was unchanged as a sector, and the utilities were actually up almost 2/3%. This is looking at the charts, the technical analysis scooter ratings, where you have energy, utilities, healthcare, and staples still above 90 as far as how they're looking from a technical analysis standpoint. And then the negative ones in, well, low double digits. You have discretionary and communication. One is at 12, the other one is at 10. Here it just shows how energy, even though it's given back a lot of its gains, it's still doing the best, followed by utilities, with the other sectors negative since the all-time high. This is going back to the beginning of the year and showing how the Dow, even though it's down, has held up the best. The pink area here is the S&P, where the NASDAQ and NASDAQ 100 have been leading the way lower because they're mostly growth oriented. For technical alerts, all of them were negative, with the S&P crossing below 3,900. The Dow crossed below a bunch of levels, and then the dollar, it's the only thing that's really holding up right now, and it hit a new 4-year high. Intraday, here's the futures where we gapped lower right when the futures market opened again, and we were negative. We were down about 0.5 to 0.75%. Well, then we started to really fall. We had the negative open. This large candle right here is the open that happened in New York, but we were negative even going into the start. Here's the intraday chart where we gapped below S1, almost made it down to S2, and this is the base that we were building. And I was looking at this saying, okay, we're going to take off. We're going to take off. There's also the possibility that we could have broken down. So I was watching for both of those. We tried to go up higher. We got above S1 slightly, but then we just stalled out, came back down, and ended up finishing pretty much at the low for the session. So our trend, the ADX has now dropped ever so slightly below 20. So we are neutral right now. Looking at, I don't know, with the information coming out, with the CPI, PPI, retail sales, do you really want to set up a market neutral position ahead of those? I would be more inclined to not necessarily do that and still just focus on the charts. Or if you do, you have strike prices that are astronomically away from where we're at right now. As far as breadth, we saw a decline based on price and volume. The advanced decline ratio, we've dropped below 0 now, so we're slightly negative. We're starting to see some weakness with the new highs and new lows. The five period moving average is rolling over a bit, and we're pretty much flat with the 10-day. Accumulation distribution, we're still above the moving average, but we're rolling over now. Some short-term charts, we got below the exponential moving average, but we're still above the simple moving average. And here's our moving average tree showing way back in the rearview mirror. We have lots of moving averages above current prices. The rainbow, we're starting to come back down right now. Can we bounce and go back up into the rainbow? Stochc RSI had been extreme positive. That got taken care of on Monday. Williams percent are also extreme positive. That got taken care of. The force index had been positive and moving a little bit higher. It's still positive now, but it did decline. Swindling trading oscillator. This has switched. This has been kind of leading us to look at things a little more in a positive light. Not right now. We're turning down based on price and volume, even though we're above zero based on price and volume. So it's still slightly positive. It could always turn around, but this is a little bit more negative right now. The McClellan oscillator has dropped slightly below zero. Our moving average study, the 20, 50, and 200, they all turned down slightly. Stochastic, it had been extreme positive. That got taken care of. Intermediate term is starting to roll over a little bit, but also in extreme positive territory. The long term hasn't really started to roll over, at least yet. Intermediate term, we're right at about the 20 period, or excuse me, the moving average, the anchored moving average right here. The PMO still positive based on price and volume. Our oscillators are going to look okay. Our PMOs that are rising, yeah, they declined from being extreme positive. The buy signals were flat. We're still advancing with those PMOs that are above zero. Chaikin oscillator has also turned down, and this is a little more sensitive to price. Chaikin money flow, which doesn't seem to be sensitive to anything, it actually showed an improvement. There's sometimes when I really like the Chaikin money flow and it seems to really help us out. There's other times when you're like, what in the world is this thing thinking? That's why I use more than one indicator. Volume tends to decrease. Vortex, still positive, but we saw a little bit of a decline in buying and we were pretty much flat on selling. The summation index is starting to roll over because the McClellan oscillator was negative, both based on price and volume. But all of our oscillators, they're still waving at us saying, look at how positive I am, but we're not seeing that in price yet. The BPI actually held up okay, hasn't really dropped down, at least yet. Ease of movement turned over just a little bit. Ultimate oscillator came down after giving us almost an extreme positive reading. TTM squeeze, it's still showing some improvement too. It's actually switched to green bars now and they're above zero. Different charts. Heikin Ashi with kind of a hammer looking thing here that's black. So that's negative. The Kagi is still positive. The Renko is still positive. And the 3-line break is still positive. So not enough has really happened yet to readjust these charts. But the Elder Impulse has gone back to neutral with the SPX and the SPY. The SAR system is still negative. Now that tends to hang in there longer. So it takes more for this system to change. We're still in a neutral deep or neutral purple right now with the go, no go system. Longer term charts, a little bit of a decline in the 50, 150, and 200 moving averages. Special K still trying to turn up. Didn't really register much of Monday's move. The Dow, we had been above the pivot level. Now we've dropped slightly below that. The diamonds have gone back to neutral. And the Qs are now back to neutral. We were looking at the NASDAQ and the NASDAQ 100 to kind of lead us higher. They got hit pretty hard in Monday's session, where the NASDAQ 100 is still above the pivot. Can it stay above that? It had been dealing with the moving average, which now looks like it might be acting as resistance. NASDAQ 100 Vixen, we saw a little bit of a move up because we had a down day with the NASDAQ 100. The NASDAQ itself, after coming up to the moving average, is coming back down and still below the pivot. Can we turn around and go the other way, or are we going to fall through this pivot level? The Wilshire, it regained the pivot level only to lose it in Monday's session. The dollar just all the way up, 107.83, my goodness. And here's the euro really falling and the dollar really advancing. Good time to go to Europe if you want to do that, if you can afford the plane tickets. Here's the Japanese yen showing further weakness, as is the euro with the dollar strength. And we're still kind of moving in the same direction with the dollar index and the S&P 500. They're having more of a positive correlation currently. Oil, I guess it did drop a little bit down to 104, but still, anytime it's above 100 is very uncomfortable for folks. The S&P and oil is still more in a neutral relationship. Gold continues to fall. Silver continues to fall. Looking at bonds, we were down with the world bond index overall. And looking at the S&P with the 10-year yield coming down just slightly, but they're tending to move in the same direction right now. The tech sector to the 10-year also turned back down slightly, but with a bias of moving in the same direction. We still have the 10 to the 5 inverted, and the 10 to the 2, which most people watch, is also still inverted. The 30-year yield is coming back down to this 50% retracement. Will that act as support again? Are we going to bounce higher, or are we going to break down? This shows how longer-term interest rates declined in Monday's session, but shorter term with the 3-month, we really spiked up. Our scenarios still looking okay when we're taking the broad market with the Amex, NASDAQ, and NYSE, looking at their highs and lows, and then taking a 5-period moving average of that. We're still bouncing up after giving an extreme negative reading. The 10-period moving average of the S&P of the highs and lows, this red arrow shows where we're at. We're still trying to bounce up after giving an extreme negative reading. The stocks above their 200-day moving average didn't really budge all that much. And then looking at shorter term moving averages with the 50, we're still bouncing up with the S&P, with the mid caps, and with the small caps. So these scenarios are still, they're showing some weakness, but they're hanging in there for right now. The VIX, it bounced up a little bit in Monday's session, but we're still coming off of this extreme reading that sometimes has marked a low in the S&P 500. The Copic curve is still generating a signal. The praying bottom fisher, and that is directional, is still giving us a signal. Here's our rotation that we're seeing. We saw a bit of a decline with the Qs, discretionary, and the growth versus value. They rolled over a bit on Monday because growth really got hit. With the large, mid cap, and small caps, we're also seeing a bit of a decline. They're still positive. They could still rebound out of this. It was just a few days ago where I've been saying, let's take this off the table. Well, then it started to recuperate. Is that going to happen this time? Then the spike, even though we're coming down a little bit in the 2-year treasury, could this be a spike? And then the correlation between the S&P and the 2-year tending to go in the same direction, but it was flat after Monday. The staples, want to keep an eye on this. They declined a bit. We're coming near what could be a death cross. And here is the ratio showing that, yeah, we might have spiked up here and we're coming back down. Will it fall even further? And will the S&P get some legs and start to go higher? So what's our outlook then? The technicals, they're trying to turn positive. They were turning positive after Friday. Now they're trying to hang on to that right now. Sentiment is negative and almost extreme again. The economic reports on Tuesday, we have the NFIB, small business optimism. Not a biggie, not a market mover. The big ones are going to start coming out on Wednesday. And then we have all the geopolitical events, just Russia, Ukraine, China, the supply chain, where they may be starting to lock down again. Inflation and interest rates, margin calls if we continue to fall, oil, we want to keep an eye on that. Earnings, not really a big thing right now. Not really hearing any Fed speak where they're doing interviews or making any statements. Japan, of course, they're coming off the heels of having their former prime minister assassinated, and they're having a lot of economic problems right now. And then the big problem that everybody seems to be talking about are the inflation fears. So our scenarios, I've actually changed from being down for all the reasons that I've just talked about, but we could easily go back into that if we see continued follow through selling. The technicals, they're trying to turn positive. And then I've said up with a question mark because it's like, okay, I'm just not seeing it right now. Some of our indicators are still looking okay, and there's a real disbelief that we're even going to go higher. Our scenarios are still holding up, but if we see more downside, those scenarios could easily go away, and also with the sector rotation. And then the technicals, we want to, can we stay above the 20-period moving average? That's kind of the last hope that we have, at least according to the charts that I show you, and just all the different levels that we have been looking for support and resistance. And now because the ADX is, I should say, below 20, that's a mistype thing there, and we are negative. So we have a negative slant on the ADX, but we've dropped below 20. So our conclusion then is the S&P is trying to turn positive. Can it stick? I guess we'll have to see how things go later in the week. It's negative, but trying to turn positive. Short term, intermediate term, same thing. Long term, we are still negative. So thank you. Have a wonderful Tuesday. And if I can, I will look at preparing a video after Tuesday's session. If we end up having a day that's not all that big of a deal, I may not do a video and I might work on some other things, because Wednesday is really the big day that we're waiting for.